You have heard us say that BaCoTech has harnessed the power of the transaction. Better yet, it has powered on the transaction for the accountant. To see what that means, it might help us if we take a journal entry back in time and see what's happened to the accountant's best friend, the journal entry. Back in the days of handwritten ledgers, journal entries ruled the day. They were supported by calculators, supporting documents, an experienced accountant, and a lot of whiteout if you're using a pen like this accountant. A journal entry was the core of the system. It was where summaries from your cash receipts, cash disbursements, purchase journals, and sales journals were recorded, and it was those summaries that were posted into the general ledger. From the general ledger, trial balances were created, which fed into the monthly and annual financial statements. The journal entry was pretty basic: a date, an account, a description, debits on the left and credits on the right, and they all needed to balance out. Fast forward 20 years and computers were dominating accounting. Handwritten ledgers were being replaced by accounting programs like Peachtree, which dominated the small business segment in the early 90s. It was the same workflow we saw handwritten before, except now different modules of the program summarize the activity before posting a journal entry, seen here as selection J in accounts payable. That single transaction, that journal entry, was the key element for capturing the details of the activity and getting them into the general ledger. Brings us to today, where the most basic program performs at levels far more powerful than anything conceived of years ago. For example, online banking, where transactions that clear banks and credit cards are compared to the entries in the books automatically, automating the reconciliation process. Bills can be paid online, payroll is direct deposited, and the payroll reports are all electronically filed, making the process of keeping the books more efficient for the business and its accounting team than ever before. QuickBooks today, checks look more like checks, making it easier to train new staff and more intuitive to pick up. And bills look like bills, but these are all just a front end for the core item in an accounting system, the journal entry. Entries are no longer batched up and posted in summary. The speed of computers made posting real time, creating even more efficiencies for the business owner who no longer has to struggle with the complexities of posting journals and closing periods. That means behind each one of these more intuitive and effective screens lies the journal entry on which that transaction is based. Online banking, check writing, entering and paying bills, receiving customer payments by credit card are all things added on and built around a single transaction, a journal entry, with debits on the left and credits on the right. Now let's go back to 1992 and take a look at that same Peachtree accounting program. At the end of the year, after the books were closed, a series of reports with balances were sent to the company CPA so an audit could be prepared and a tax return could be filed. This list of reports included a general ledger, trial balance, balance sheet, and income statement. Those reports were sent to the accountant after year end so he could start working within a couple of weeks of the deadline, along with everybody else's balance sheet, income statement, general ledger, and trial balance. Now that was then. Let's go to today and see what treats are in store for the account. Several years ago, QuickBooks created the role of external accountant, and with that role came the client data review. Clearly not something designed by a CPA. It is an overwhelming to-do list, especially if you don't get a file until shortly before it's time to prepare a tax return or issue financial statements. It has some very helpful features, so if the books are a mess, you can work with the transactions easier, but upon closer inspection, you note that it's looking backwards. It's set up so we can access the file after the fact, and it really doesn't do anything for a CPA in the way of preparing a tax return for the client, or in the way for the client to get an accurate view of his financial position. Unlike online banking and other enhanced features in QuickBooks, this requires the CPA to log into the client file, meaning multiple versions of QuickBooks have to be available so the CPA can access the records, or a CPA has to check his files to find where that file is so he can figure out the password, log on, etc. And hopefully none of that's changed. It's a lengthy process that requires a lot of work just to get the balances after year end. Once they are cleaned up, it's time to go to reports. The reports menu reveals a lot of the same information we had in Peachtree 30 years ago. The balance sheet and income statement are on another menu. QuickBooks tried to give us an income tax summary to work with, but that's reliant on a client update when they make changes to their chart of accounts and is often less efficient than actually keying in the return. All this requires we constantly open and close their file and dump out balances. Where are all the enhancements the rest of the program had? Why aren't we taking advantage of that? All those features packed a punch, and if we were to dig up that old journal entry again and look, you can see that plain old journal entry has a lot of other information tied to it now. Unlike reports with balances, transactions have types, names, classes. We can even access state information. We could work with clients during the year so transactions were created to help us apportion income between states. We could use the payee on a check to determine if a contribution is charitable or political and know that information now. That information could also shed light on whether transactions were coded correctly. Features like the client data review could fix an issue before it got out of hand and before it was time to file a tax return. And if we address the transactions in the year, the work is already done when it's time to file the tax return. Accounts to reverse can be set to reverse in the workflow. Those opportunities don't exist in a static report cobbled together shortly before the deadline. They exist only in the journal entry, with debits on the left and credits on the right. So that's what we mean when we say BaCoTech has harnessed the power of the journal entry. It's harnessed the power of the journal entry to do things now, real time, this year. Get started now. So there's plenty of time, not overtime, but time to plan, to assess, to determine what the best path is that'll minimize our tax liabilities, to set a path for the information to flow so it can go straight into a tax return at year end, to set things up to automatically reverse, to track, to post, to do things, and most of all, to make it so we can print out a tax return like a bank statement at the end of the year on a PDF